working on business development for the portfolio. And across all of those, we invest out of two different funds, doing early in growth, but in total, it's everything from $1 to $20 million of equity checks. We've got a pretty broad scope, but so far we've invested in a number of things across enterprise software, some marketplaces, and also in financial technology. But we're also quite active in the health space and sort of a lot of things straight to consumer.
Got it. And so which means that you kind of are sector agnostic at this stage. And given the tickets 1 to 20 million, it can be almost seed, Series A, Series B in some cases, depending on the value of the round. And I assume that you also do follow-ons.
Right, exactly. So we can follow on to those. And I'd say, look, the sector focus is essentially, we said with the LPs we started with, right, where anchor investors, the insurance company AXA, that these are all, kind of across enterprise software and fintech, things that they could use or, build partnerships with. And then also, kind of everything across health, property, travel, logistics. These are all areas that are big for insurers, where there's also partnership opportunities, right? So we don't really do gaming, we don't do e-commerce, but kind of there's a lot going on in the other spaces.
Got it. And just giving some context, we are just concluding the introduction part, so getting to know a little bit more about Imran, about his career, and also about AXA Venture Partners and its positioning. We had some technical issues in the beginning, which is not normal, so apologies for the community. Just to let you know, today, as special guest, we have Imran Akramr, the general partner at AXA Venture Partners. This is part of a very special edition of VCU interviews, giving also the investor perspective about the scaling up process. As you know, we have been covering a lot of CEOs and also product engineering, marketing, sales, customer success leaders on the scaling up journey. And of course, the investors are very important in the process of scaling up a company. And that's what we are trying to cover here with Imran today. So he has an interesting consulting background, namely from Bain, also some traditional, has been in traditional roles before. And now, in summary, as he was saying at the beginning, if it was not covered, having fun, making money, and also making history, I think that it is fair to say, with offices in London, Paris, New York, San Francisco, and Hong Kong, tickets of 1 to 20 million of investment in terms of verticals, a little bit sector agnostic, but enterprise fintech, given that this could be used by AXA itself as LP or as a partnership, but also health, property, travel. Is this a good summary, Imran, or would you like to?
It's like seeing my scorecard come back, right? That's it, exactly. And then in terms of the way we're set up, it's traditional fund structure. The 4 partners in the fund are the 4 who make all the investment decisions, which means hopefully we can keep moving just as fast as we did at our prior funds.
Got it. Perfect. And always a question that I like to ask in this special edition to investors is, usually we live at a time in the past that it seems that we were always, how should I chase an investor? So what do I need to do as a founder to have the opportunity to pitch an idea or a project or a business to an investor? And we are getting to a time where the cash or liquidity in the market is much bigger or larger, and the good businesses, the good deals sometimes are scarce for the amount of money available to invest. So do you have any kind of story where you really needed to invest a lot on convincing a team to join your portfolio?
Well, I think, as you say, all the good teams at the point where, take especially our growth fund, right, where we're getting into things once the initial traction is there, people have shown sort of the economics of their customer acquisition are working. once that gets apparent, then I think there's always lots of people interested. And then it becomes more a question of what's the fit with what the company needs for the next stage and our experience. So I think with all the best people, or at least I would say all the best people, I think they've gone and they spent as much time testing us, right? They will ask for references. They will take up the references. That'll be entrepreneurs we've worked with in the past. That'll be other investors. Some of those are obviously the easiest, right? If some of the people who are already invested in a company have worked with me and us before, then those are positive references, right? And I think at this point, we're very happy that we say to people, look, you can pick whichever of the companies you want to go talk to. We don't mind that. There's nothing to hide, because we think they'll all they all are going to say good things about us there.
Yeah, I will not go in that direction, but I think there are some articles that I had the opportunity to read that sometimes even leading an investment firm is very similar to the entrepreneurial world. So we also need to create an investment thesis, a business plan, to promise a return, a huge investment, something that we can differentiate ourselves in terms of team, in terms of thesis, that we can generate a return to the LP. And then, of course, there is the stress of the execution and being able to have the return that we promise it to the LPs.
But and I think it really does also matter what the personalities and relationships are between the parties, right? I think it's the same with our investors. I think the same with entrepreneurs and their investors, right? And whatever it is that makes the initial connection, right?